This is your LMAX exchange technical update for Tuesday, April 4th, 2017. Euro dollar. So while this latest setback in the euro could be the start to something more significant and a resumption of the broader downtrend, we would caution at this point against getting overly bearish, with the market coming into some critical support around current levels. If you look at this latest round of setbacks, we have a key 61.8% fib retracements around the 106.50 area, and then a 78.6 fib retracement down around 105.80. That's off this recent move that we've seen from the low for March down around 105 up towards the recent high just over 109. So we have a 61.8% fib retracement at 106.50 and then below a 78.6 retracement at 105.80. So this is prime real estate in this area between 105.80 and 106.50 for some form of a higher low still in favor of that next major upside extension, which would once again put this inverse head and shoulders type formation back in play and open the door for a major upside if we can push back above 109 towards the 114 area. At the same time, if the market breaks down below 105.80, that would suggest that the market is looking for a bearish resumption, opening the door for a retest of that 104.95 low that we saw back in February and exposing the retest of the 2017 17-year low at 103.40 further down. Just one more note here about this key area of support. It also coincides with the Ichimoku cloud, a trend indicator, and while the market holds above the cloud, it is still technically within an uptrend, and so that bottom of that cloud comes in also around 105.80, so an added level of support and confluence in the zone in the euro. And the key takeaway here is that while we have seen setbacks, the market could easily start to find support in this area here between 105.80 and 106.50 ahead of the next upside extension and in favor of a higher low. Sterling dollar. So cable setbacks have extended after the market has once again been well capped up in key resistance towards 127, and the market now could be on the verge of pulling back and breaking down towards a retest of the 2017 low at 1987. That's the low that we saw all the way back in January. But we would need to see a break and close below recent support at 23.77 to strengthen this outlook and accelerate declines. Dollar yen. So dollar yen has broken down below some major multi-week support at 111.60, and that breakdown does suggest that we could see a measured move downside objective towards 107.60 over the coming days. This is after the market had been consolidating for several weeks between 115.60 and 111.60. That's a 400-point consolidation, and so again, the breakdown below 11.60 would open that measured move extension equal in size of 400 points down towards 107.60. So any rally right now should be very well capped ahead of 114, with only a break back above 115.60 to compromise the bearish outlook right now for dollar yen. Euro Swiss. So Euro Swiss has been a very slow go, but the trend has been to the downside, and there is risk that this market could finally break down below what has been an elusive 2016 low at 106.24. But after recently putting in what could be a lower top at 108.26, a breakdown below that 106.24 level would confirm a fresh downside extension towards a measured move of about 200 points down towards 104. Only back above 108.26 here would compromise that outlook. Aussie dollar. So Aussie setbacks have accelerated to the downside following the break of some recent short-term support around the 75.88 area, and this opens the door and exposes a retest of more significant support at 74.92. That's the low from the 9th of March further down. A break below there would then expose declines towards the 75 handle. At this point, any rally should be very well capped, with only a break back above some recent resistance around 76.80 to delay the outlook. Dollar CAD. So dollar CAD once again is very well supported on dips, this time at 32.64. The market has been since consolidating above this level and could be in the process of putting in a higher low ahead of the next major upside extension. This time the upside extension could lead to a break of multi-day highs at 135.99, which would expose a measured move into the 140 area further up. Only back below 132.64 right now would delay the outlook. Kiwi dollar. So Kiwi rallies continue to be very well capped after the market has stalled out in 2017 at 73.76, and this latest round of gains has been capped now ahead of 71, ahead of what could be the next major downside extension below medium-term support at 68.62, exposing 65 further down. SPX 500. So the S&P 500 has been in an intense uptrend over the past several years, but could be showing signs of the onset of a short-term correction that might develop into something more meaningful. At this point, though, this latest rally needs to stall out ahead of 2380 in favor of the next downside extension below 2320. But a break below 2320 will be significant, as it will suggest that the market is on the verge of rolling over, exposing a measured move downside extension back below 2300 and towards 2270 further down. This is a 50-point drop below 2320 after what would have been potentially a consolidation and correction between 2320 and 2370. That's a 50-point move. And so again, there is risk for this market to roll over, but that will be only confirmed or strengthened on a break below 2320 over the coming sessions, which would then expose 2270 further down. Inability to take out 2320 will suggest that this market is just more in a consolidation ahead of what could be the next major push higher to fresh record highs beyond 2400. Gold. So gold has been very well supported over the past several months since basing out in 2016 just shy of 1100, and the market has since been putting in a series of higher lows and higher highs. A higher low now looks like it wants to be in place at 1195, which will be confirmed on a break back above 1265, opening the door for a measured move upside extension towards 1335 over the coming sessions. So again, it's going to be interesting to see how the market responds to 1265 in the sessions ahead. If we establish above that level, it will confirm that 1195, higher low above 1180, and open the door for the next major upside extension towards 1335, just shy of that 2016 peak at 1375.